The United States just bailed out Argentina with $40 billion. This happened while the U.S. government is still in a shutdown. The United States Treasury literally bought Argentina's pesos, a currency that has hyperinflated by over 200%. And we are being told that this is supposed to be a good investment. President Trump is now reportedly considering doubling this bailout to $40 billion. Trump praised Argentina's President Javier Milei during his recent visit to the White House, calling him MAGA all the way. Now, what's so strange about this is that Argentina is not even one of America's biggest trading partners. It's not in the top 3. It's not even in the top 5. And none of this was debated in Congress. It wasn't voted on by your representatives. And it wasn't really even talked about in the news. Government officials are telling us, emphatically, that this is not a bailout. So, the question I had is, why are we doing this? And just as importantly, where are we getting the money to pay for it? It turns out the money is going to come from something most people have never even heard of. It's a fund deep inside the Treasury called the ESF, the Exchange Stabilization Fund. It's a secret pool of money that has only been used a couple of times throughout history. And now it's going to be used to prop up and essentially bail out an entire foreign economy. This action happens to be at the direct expense of American farmers and taxpayers. This is especially true now that President Trump has floated the idea of bringing down meat prices by importing beef from Argentina. Cattle ranchers across the country say this will not help Americans and will only hurt their livelihoods. Now, the official story is that the United States is doing this out of the goodness of our heart. That Argentina is struggling and they represent MAGA values. Therefore, the U.S. should help them stabilize their economy. This, by the way, is completely ironic when you consider that Argentina's president, Javier Milei, ran for election on a platform of free markets and no bailouts from the state. But now, his country is getting one of the biggest bailouts of all time. So, none of that made sense to me. But the more I looked into this, the more connections I started to notice. Connections between Wall Street, the United States Treasury, and a couple of very powerful investors with deep financial interests in Argentina's debt. These are people who have been betting on Argentina's recovery for years, and if Argentina's bonds are allowed to collapse, billions of their dollars would disappear. And when you realize who is now sitting at the Treasury and who they worked with in the past, you'll see how it's all connected. It will all start to make a lot of sense. So, in today's video, I want to show you how the United States just bailed out a foreign country, why they did it, and what this says about the new financial war between the U.S. and China. Before I get into what this means for the United States, for China, and for the dollar, let me first explain how this actually happened. Because obviously what the Treasury did was not approved or passed through Congress. It wasn't voted on, and it didn't even come from the Federal Reserve, which is the central bank of the United States. It actually came from a completely separate pool of money, one that very few people even know exists. It's called the ESF, the Exchange Stabilization Fund. Now, the Exchange Stabilization Fund was actually created way back in 1934, during the Great Depression. It was created with profits the United States made from revaluing gold. At the time, President Franklin Roosevelt literally changed the price of gold from $20.67 an ounce to $35 per ounce. All of the sudden, the U.S. government just declared that its gold reserves were worth 70% more than they were the day before. That repricing created a huge profit. It created a benefit of billions of dollars for the Treasury. But instead of letting Congress just spend it all, Roosevelt decided to lock it away in a new fund that could be used for emergency stabilization. The idea was that the Treasury could use this secret pool of money to intervene in currency markets. They could use it for things like stabilizing the dollar, or if they really wanted to, getting involved in foreign economies, without ever needing Congress's approval to do it. And for the last 90 years, it's been sitting inside the Treasury. It was only used a couple of times throughout history that we know of, at least publicly. For example, it was used in 1995 to bail out Mexico during the peso crisis. It was used again in 2008 during the global financial collapse. And it was used again during the pandemic to backstop credit markets when the Federal Reserve ran out of tools, like lowering interest rates past zero. And now it's being used again. This time to prop up another country's currency and, by extension, their economy. Now the question is this funded by our tax dollars? The answer is yes and no. The Treasury isn't literally sending Argentina a blank check, at least not directly. What they're doing is using something called a currency swap through the Exchange Stabilization Fund. Here is how it works. The Treasury buys Argentina's pesos from Argentina's central bank. In return, it gives them United States dollars. In theory, those pesos then act as collateral for the loan. But in practice, the United States Treasury is now holding a hyperinflating currency, a melting ice cube, on behalf of U.S. taxpayers. Now that's just the first $20 billion. The second half of this deal was more recent and is expected to come from private investors, hedge funds, sovereign wealth funds, and banks. Now you have to ask, if you're a bank, why would you do this? The only reason these private investors are willing to participate is because the United States Treasury is guaranteeing the security of their money. This is also why they want collateral. They want something to back the loan with. Because if Argentina defaults and it can't pay back the United States, it's going to be the Treasury that gets hurt. And by extension, United States taxpayers are the ones left holding that bag. So, are taxpayers paying? Not initially. But if it turns out to be a bad investment, then yes, we absolutely are. So this brings us to the next logical question. Why Argentina? If you think about it, there are arguably a lot of other countries around the world that could use $40 billion. The United States itself, with a government in shutdown, might need it too. It's not just Argentina that needs help. So why them? Why now? First, let me explain the official story. And then I will show you the revelations I found when I followed the money. According to the Treasury, this is not what it looks like. It is not a bailout. Officials are on record saying, quote, "There's no money being transferred," and the Exchange Stabilization Fund has never lost money, and it's not going to lose money here. This is being called a currency stabilization partnership. That is the polite, Washington, D.C. approved jargon for saying the United States is helping Argentina stabilize its peso by buying it directly through the Exchange Stabilization Fund. Now, the person in charge of this entire plan is, of course, the Treasury Secretary, Scott Bessant. This is a critical fact you need to understand. Bessant isn't a lifelong government bureaucrat. He is one of the smartest macro investors on Wall Street. Before joining the Treasury, he spent years running a hedge fund. He managed billions of dollars for one of the most successful and controversial investors in history. In his first month as Treasury Secretary, Scott Bessant has been very loud about one specific thing. The United States has to take a bigger role in global markets again. He is reportedly, quote, committed to getting China out of Argentina, stating, "They're all over the place in Latin America." His argument is that for decades, the United States has let the International Monetary Fund, the IMF, the World Bank, and most importantly, China, dominate the funding of the developing world. America, he argues, needs to get back on track. In other words, Bessant wants to slow down this chart. This is the chart that shows decades and decades of de-dollarization as countries move away from the US dollar. The goal is to defend the dollar's global role. How? By helping allied economies stabilize before China steps in to do it with the yuan. A yuan, by the way, which we know Beijing is planning to back with gold. That is the geopolitical game being played. So Argentina is set to be the first example of this new strategy. Bessant's reasoning is that Argentina is a country with huge potential. It has massive reserves of natural gas and, critically, lithium for batteries. It has vast farmland, but right now it is crippled by decades of bad monetary policy. We're talking inflation over 200%, multiple currency rates, and a long history of defaults. The official argument is that by stabilizing the peso and bringing Argentina back into the global financial system, the United States can do two things at once. It can help an ally, and it can protect the dollar's influence across Latin America. This also just happens to be the one region that China has been trying to pull into its own economic orbit for years. Okay, that is the official story. It sounds like a plausible geopolitical strategy, right? But when you really look into this story, you have to ask the old Roman question, Cui Bono? Who benefits? How does the money really flow? And who does it flow to? More specifically, which private funds have exposure to Argentina and its debt? This is where the story starts to take a very interesting turn. The more I looked into it, the more I noticed some really interesting connections. Connections between Wall Street, the United States Treasury, and a very specific group of investors. Investors with really big financial interests in Argentina's debt. Here is how some very powerful people placed bets on Argentina. I have to be very careful here, for obvious reasons, but you can verify all of this information yourself. There are at least two big funds that we know of with massive exposure. Funds like Discovery Capital, which was founded by Robert Citron, and Soros Fund Management. But where this gets really interesting is that the current United States Treasury Secretary, Scott Bessant, used to work directly under George Soros at the Quantum Fund. He managed billions of dollars there and worked with the same people who run these funds and have deep investment interests in Argentina's economy. So, the person who is now running the Treasury, the one who is approving this entire $40 billion deal, is the same person who spent decades of his career making money from these exact types of trades. Now, that doesn't mean anything illegal is happening, but it is an interesting coincidence that is at least worth mentioning. Here is the bet those funds made. They bought billions of dollars worth of Argentina's bonds that were already trading as what's called distressed debt. Distressed debt is just a polite Wall Street way of saying the market thinks you might never get your money back. It's any bond that trades below 70 cents on the dollar, signaling a high chance of default. Argentina's 2035 and 2041 sovereign bonds, which make up most of what Wall Street holds, have been trading as low as 25 to 35 cents on the dollar in 2024 and 2025. That is deep distress. That is a signal that you are almost definitely not getting your money back. So, they made a bet. The bet was that the new president, Javier Milei, could come in and actually fix Argentina's economy. They bet he could cut out unnecessary spending. Remember all those videos of him holding a chainsaw, vowing to take it to government bloat? That's what they were betting on. If he could fix the economy, that would make Argentina's bonds valuable again. But that didn't end up happening. Inflation stayed above 200%. The peso has kept collapsing, and those same bonds have fallen more than 30%. Argentina's risk premium, which is the price that investors charge to hold its debt, increased exponentially. Every single day that the peso went down, the portfolios that held those bonds were just bleeding money. What that means is that some very powerful people are losing a lot of money. But now, fast forward to July 2025. Out of nowhere, the United States Treasury, run by their former colleague, steps in and says, "Don't worry, guys, we got you. We're going to stabilize your currency. We'll do it without congressional approval. We're going to use the Exchange Stabilization Fund mechanism." And yes, that action helps secure a potentially strategic partner for the United States. But as a side effect, it also just happens to save billions of dollars for the exact funds and people that place those bets on the recovery that never ended up happening, at least not organically. And because the official story doesn't call this a bailout. That's not the framing. No one can really criticize it as market intervention, but behaviorally, it looks exactly like one. The money is coming from the Exchange Stabilization Fund, which, remember, sits inside your treasury. So if those pesos lose value, which they are, it's the treasury that takes the hit. And when the treasury takes a hit, that shortfall gets filled with new debt. New debt that taxpayers ultimately have to repay. This has already had real negative consequences on American citizens. Farmers are struggling right now because of costs, drought conditions, and low grain and beef prices. In other words, on a practical level, we are subsidizing private investors and our direct economic competitors. This is where a lot of people have a problem with what's happening. It also sets a very bad example. The United States government is now on record publicly saving billionaire investors who made bets that went bad. So, if this becomes the new model, doesn't it just tell other hedge funds that the United States can save you too? As long as you can work out a backdoor deal? As long as it can be reframed as, we're defending the dollar, or we're defending American values. The reality is that the United States is already running multi-trillion-dollar deficits. We are borrowing money just to fund our own programs. And somehow, we are supposed to have an extra $40 billion laying around to gamble on another country's hyperinflated currency. That doesn't make much sense, but let me just tie it all together and explain how this story is part of a much bigger picture. Because yes, this deal definitely helps Argentina, and it definitely helps the billionaire friends of this administration. But I don't think it's just about Argentina. It's also about the United States fighting its war with China. A war over the very idea of what money should look like in the future. Think about what is happening on the global stage. China is getting ready to build its gold corridor. This is the node of vaults across Asia, Africa, and Latin America. They are literally creating a parallel financial system. This system is backed by their economy, with a money that is redeemable for gold. The United States has been doing the same thing, but in reverse. So this bailout of Argentina, I don't think is some random act of charity. It's not altruism. The president is not doing it just to be nice. He's doing it because it's supposed to telegraph to the world that the United States still has the power to stabilize economies whenever it wants. China might be lending in yuan backed by gold. The United States is now lending dollars backed by treasuries. And Argentina is the test case scenario. Why? Because it's the one Latin American country that has been slowly getting closer and closer to China. Over the last few years, China's banks have lent Argentina billions of dollars to build things like power plants, railways, and nuclear projects. They have been trying to pull Argentina into their sphere of influence, just like they've done with dozens of other countries across Africa and Asia. So the United States is stepping in and saying, "Whoa, hold on a minute. You guys are becoming too close of friends. We'll lend you $40 billion if you need it." This move is designed to block China's influence. It's a play to keep Latin America inside the dollar system. And if it works, if Argentina can stabilize, which seems to be totally conditional on Javier Milei's re-election, because President Trump said if he does not get re-elected, the United States won't support him. If he does win, and if this strategy works, I think we're going to see it play out again and again with other countries. There are already rumors that other currency stabilization partnerships could be next. Partnerships for countries like Brazil, which is very important, Colombia, Egypt, and Kenya. The Obama administration missed a big opportunity in the 8 years he was in, as many Latin American governments went center-right. So now, we are seeing Argentina, Paraguay, Ecuador, and Bolivia. These are all countries that have taken huge amounts of infrastructure loans from China, and they are now drowning in that debt. Take Brazil, for example. Brazil owes tens of billions of dollars to China's state banks through the Belt and Road Initiative, and it's already a part of BRICS. Colombia's peso has fallen over 20% in the last year, and it's facing serious inflation pressure. Egypt, which is one of China's biggest borrowers in Africa, is also on the verge of another IMF rescue. These are exactly the kind of candidate countries where the United States could step in and try this strategy out. And remember, this is not the first time this has happened. Like I said, it happened before in 1995, when we bailed out Mexico. It was for similar reasons, to keep it from falling into financial chaos that could have spilled over into the United States. But this time, it's a little different. Because back then, the world was still firmly on the dollar standard. Now that's changing, and the United States is playing offensive defense. It just also happens to benefit some of the wealthiest people in the world. People like Discovery Capital, which is one of the biggest holders of Argentina's debt, run by a former Soros Fund manager, and the current Secretary of the Treasury, who also worked under George Soros, running billions of dollars at the same company. That's all just a side benefit, which I'm sure has nothing to do with this policy at all.